Unlocking trading success, choosing between fundamentals, technical analysis, and mindset mastery. Embarking on a trading journey demands an understanding of three crucial pillars: fundamentals, technical analysis, and mindset. Each serves as a cornerstone, shaping strategies and guiding decisions in the ever-evolving financial markets. Mastery of these aspects forms the bedrock of trading success. Grasping the financial markets begins with the fundamentals. This involves recognizing how economic, political, and social factors influence market dynamics. A solid grasp of these basics empowers traders to anticipate market movements, making informed decisions that align with overarching market trends. Economic indicators play a pivotal role in trading, serving as the compass that guides market navigators. From GDP growth rates to employment statistics, these indicators provide insights into the economic health of a nation, directly impacting trading strategies and market positions. Delving into a company's health requires a thorough analysis of its earnings reports and balance sheets. These financial documents reveal the underlying strength of a business, guiding traders in making educated investment decisions. Understanding these elements is crucial for assessing potential risks and opportunities. The ripple effects of international events on markets cannot be overstated. Global incidents, from geopolitical tensions to international trade agreements, have the power to sway market sentiments and trends. Staying attuned to these developments is essential for traders aiming to capitalize on or mitigate the impact of such events. An overview of technical analysis offers traders a powerful toolkit for navigating the markets. This methodology focuses on analyzing statistical trends from trading activity and price movements. Traders use this data to predict future price movements, making it a cornerstone of their strategy. Chart patterns play a crucial role in technical analysis, serving as signals for traders. These patterns, such as triangles, head and shoulders, or flags, can indicate potential market movements. Understanding these patterns allows traders to make more informed decisions, potentially leading to profitable trades. The significance of volume in confirming trends cannot be overstated. A price movement accompanied by high volume is often seen as a stronger, more valid signal. This is because high volume indicates a high level of interest in the asset, making the trend more reliable. Technical indicators like moving averages, RSI, relative strength index, and MACD, moving average convergence divergence, provide traders with insights into market trends and potential turning points. By interpreting these indicators, traders can identify opportunities to enter or exit trades. The psychology of trading focuses on developing a winning mindset, which is just as critical as technical skills. A trader must cultivate emotional discipline and resilience to handle the highs and lows of trading. This mental fortitude is key to achieving long-term success in the markets. Emotional discipline stands as the cornerstone of trading consistency, distinguishing successful traders from the rest. It involves the mastery of emotions, enabling traders to execute strategies without fear or greed influencing their decisions. This discipline ensures that rationality guides each trade, fostering a stable trading journey. Setting clear goals and implementing effective risk management practices form the backbone of successful trading. By defining achievable objectives and establishing limits on potential losses, traders can navigate the volatile market landscape with confidence. This strategic approach minimizes losses and maximizes gains, contributing to long-term success. Patience and persistence are invaluable virtues in the trading world. The ability to wait for the right opportunity and endure through the inevitable ups and downs can make the difference between fleeting success and lasting achievement. These qualities ensure traders remain focused on their long-term goals. Integrating fundamentals with technical analysis offers traders a comprehensive view of the market. This combination enables the identification of high-potential trading opportunities, backed by both macroeconomic indicators and chart patterns. It's a strategic advantage that leverages the strengths of both analysis types for better informed decisions. Deciding when to trust your gut involves distinguishing between intuition and impulse. Intuition is informed by experience and knowledge, offering valuable insights that complement analytical findings. Conversely, impulse is driven by emotion, often leading to hasty decisions. Recognizing this difference is crucial for making sound trading choices. The journey of a trader is one of constant evolution. Embracing continuous learning and adaptation is crucial in navigating the ever-changing tides of the financial markets. Staying informed about new strategies, market trends, and economic indicators can set you apart from the competition. Crafting a personalized trading plan is akin to drawing a map for your trading journey. This plan should reflect your financial goals, risk tolerance, and trading style. It acts as a guiding light, helping you make decisions with clarity and purpose, steering you towards success. In today's trading world, leveraging technology is not just an option, it's a necessity. Advanced software and tools not only enhance your trading experience, but also provide you with real-time data and analytics, making it easier to spot trends and make informed decisions. The role of community and mentorship in trading cannot be overstated. Being part of a trading community offers new perspectives, while mentors can provide invaluable guidance based on their experience. This support network can be instrumental in overcoming challenges and achieving long-term success. Common pitfalls in trading, such as emotional decision-making and overtrading, can derail even the most seasoned traders. Awareness and proactive strategies to avoid these traps are essential. Developing a disciplined approach and sticking to your trading plan can help navigate these obstacles effectively. Exploring the journeys of successful traders provides invaluable lessons on the art of trading. These case studies illuminate the diverse strategies and disciplined approaches that have led individuals to remarkable success, offering a roadmap for those aspiring to replicate their achievements. Crafting your path to trading success demands a balanced mastery of fundamentals, technical analysis, and mindset. By integrating these core pillars, traders can develop a robust framework that supports informed decision-making and resilience in the face of market volatility, setting the stage for sustained success.